How's it going, everyone? It's Sam. Binance is going through something really rough right now. Forbes just called them out as being very similar to FTX. We have to talk about that. We have to talk about some news on DCG and Genesis, what's going to happen there. We're coming up on one of the worst months, if I think it might actually be the worst month, typically for Bitcoin. So what can happen there? How far can we fall down? Michael Saylor agrees with Gary Gensler that every other crypto is a security besides Bitcoin. We have news on a couple important stocks here today as well. We're going to cover a lot. If you don't mind, hit the subscribe button underneath the video. That does help out the channel, and you can get future videos just like this. Heck, I'm actually in Mexico for the first time. I am here sitting in my room. Before I go out, there's an all-inclusive. There's a beautiful lady waiting for me, my wife, on the beach, and I'm here making these videos for you because I want to make sure that I continue to give you the information as soon as possible and the relevant information to keep you going in the market right now, because there is a very important thing that we have to remember in the market right now, which we'll talk about later in the video. So if you don't mind hitting that, there are also links underneath the video in case you want to support the channel. You can get some free money as well if you sign up for M1 Finance and Deposit or Webull or moomoo. All three of those I use, so definitely check out those links underneath the video. Now, let's take a look at the crypto market. I apologize again for the setup because I've already had a couple things go wrong with another video that I'm shooting right now. The setup's a little bit janky, but we'll get back to the normal setup when we get back home in about a week. So, crypto market is down a little bit here today, 1.3%. The general market was down a little bit last time I looked as well, but Bitcoin's doing okay, right around 23,500. Now, BNB is up a little bit in the 24-hour, actually kind of surprising with some of the FUD that came out recently. BUSD continues to fall down in market cap because of the US going after Paxos and BUSD. And right now, Binance is going through a good amount of FUD, fear, uncertainty, and doubt. Now, that doesn't mean that's necessarily true or that's not true. It's just there is a lot of fear, uncertainty, and doubt about Binance and what they're doing over there. Forbes just said that Binance moved $1.8 billion in stablecoin collateral to hedge funds last year. They say that meant that over $1 billion worth of tokens called BPEG USDC, or their Binance Peg USDC, digital replicas of the dollar-pegged stablecoin USDC, were uncollateralized, despite Binance's claim that they were 100% back. So they say cryptocurrency exchange Binance moved $1.8 billion of collateral meant to back the customer stablecoins to hedge funds last year, according to the article that was published yesterday on Forbes. According to the report, Binance transferred the collateral to hedge funds, including Alameda Research and Cumberland/DRW, and did so without informing its clients, according to the blockchain data from August 17 to early December examined by Forbes, a period that encompassed the collapse of fellow crypto exchange FTX holders. Holders of more than $1 billion of crypto for BPEG USDC had no collateral for instruments that Binance said would be fully backed by the token that they were pegged to. So, some pretty big claims by Binance. CZ came out and said that he's reluctant to spend any time on this again, but Forbes wrote another FUD article with a lot of accusatory questions with negative spins, intentionally misconstruing facts. So he answered some of the questions here. They say that they called out Tron, Amber Group, Alameda Research. They seem to not understand the basics of how an exchange works. Our users are free to withdraw their assets anytime they want. Their withdrawals are turned into received hundreds of millions of shifted collateral. Our users must also deposit to Binance first to be able to withdraw, which are also easily traceable on the blockchain. The article conveniently ignores the deposit transactions. The article also tries hard to recognize Binance and FTX together, including the choice of the article title. The article also tries to categorize Binance and FTX together, including the choice of the article title. Binance has stood the test of time, with users safely withdrawing billions of dollars in December. We implemented proof of reserves using a ZK, or zero knowledge approach, suggested by Vitalik, protecting our users' security and privacy. Binance holds users' funds one-to-one, and his Chinese ethnicity was brought up again, as if that mattered. He is deeply disappointed by Forbes and the fact that they continue to write baseless articles, losing their own credibility. Now, personally, I think Binance could be more open. They've done these proof of reserves, but they haven't done any proof of liabilities. They haven't been as clear as they could be. And while I do think that there is a lot of FUD out there, I think there are some questions, right? We have to be careful where we keep our money in our crypto, especially with everything that's been happening. So I think CZ and Binance can continue to get mad that their business is being called into question, but that's just how it's going to be for a long time. Now, there are some things that shouldn't really matter, such as CZ's ethnicity, and they have tried to work, I think, to show some of their reserves, but also they haven't been as forthcoming as they probably could be. Now, I'm not trying to spread FUD. Whenever I talk bad about Binance or talk about anything that's negative towards Binance, people get angry in the comments saying them like trying to push the price down or something, or trying to create a collapse. I think any company that is trying to do something sketchy should collapse. So if Binance is, I would prefer that they just go down now. I hope that's not the case. I hope that they are not doing anything fraudulent with people's funds, because I personally wouldn't want anyone to be hurt. But the fact is that these companies shouldn't continue to be able to work if they are acting fraudulently. It's better that they get caught earlier rather than later. Now, I'm not saying that that's necessarily what's happening with Binance. I think Binance is much more conservative than other companies, but if they are lending out users' funds, obviously I hope that stops. Now, I think that this really does hurt Binance, though. All this negative publicity, it does call people to question whether they actually hold the crypto, and I think that actually helps the users because they just go to cold storage most likely. That's what I did. I did hold more crypto on Binance than I do now. I'm holding like a record low amount, basically just a small fraction of a percentage of my portfolio. That way, if I need to make a quick trade, I don't have to do as many transfers, but it's nothing large. I have 99.9% of my crypto on cold storage, but I think that this will hurt Binance long term, but it will help users, like I said, because I think most people should hold their crypto on self-storage, especially if you're in crypto this early. I think you have the capability. If you can figure out how to if you can figure out how to buy crypto, you can figure out how to take it off. Now, we have a lot of other stuff to cover. I'll try to get through it quickly because I think I spent a little bit too much time on Binance information. But DCG just shared financials yesterday. They have $262 million in cash on hand and owe $575 million due in May. A $1.1 billion loss in 2022, and they are functionally insolvent, according to this Twitter account. Now, I'd be careful about saying functionally insolvent. Basically, they need to come up with $300 million in cash. Illiquid, insolvent, some people use them interchangeably. I think this is more illiquid, but that's because I think that they have over $300 million worth of assets. But if they can't actually sell them, then they are insolvent, right? So they are going to have to figure out some way to get $300 million more or some kind of loan or something like that. I don't think there are going to be too many companies that are willing to, or banks that are willing to give them loans. And you know that they have recently tried to sell CoinDesk. We talked about that, and they're looking for about $300 million. And look at that. That would be the exact difference that they owe. So it would be interesting to see if they're able to come up with this. Otherwise, there could be some kind of Otherwise, they may have to sell assets. We'll have to see what happens in the future, but that obviously could hurt crypto, and when that comes up, I think we're going to have to pay attention to it. We also got news over the weekend that Gary Gensler is now cracking down on crypto even more. He said that he thinks everything besides Bitcoin is a security. This kind of shook the markets. Not that it caused the markets to go down too much, but it caused a lot of people to be fearful. I think you have to remember that just because Gary Gensler thinks this doesn't mean that that's actually the case. He does not have 100% authority over what's a security and what's a commodity. He cannot just control what happens just by a flick of a switch or by whatever he thinks goes, right? He has to go to court and fight these different entities, these different cryptocurrencies and companies. And as we know, they've been fighting with Ripple for years. And this is just one cryptocurrency out of over 10,000, 20,000 cryptos. So I think it's going to be pretty difficult for them to declare everything else a security besides crypto, besides Bitcoin. But this could hurt these other cryptos in the meantime, right? Bitcoin, if this is a commodity, everything else is a security, I would assume the dominance would go up a bit, or at least compared to what it would be if this was not the case. So I am mostly Bitcoin right now. Hopefully this is not the case, though. Hopefully these other cryptos aren't considered securities. I don't think a lot of them should be considered securities, but we'll have to see how this shakes out. They are going after stablecoins as securities as well. Now, we should talk about what typically happens in March because we are at the end of February. 2023 is off to a great start with 2 consecutive green months, assuming this month stays about, or the price stays about where we are now. We had a 39% month in January and then a 1.34% month in February. So not that great of February, but still up a little bit. But historically, March has been the second worst performing month with an average Bitcoin return of negative 6%. Now, where would that put us right now? Well, that would put us down around 22,000 or so. So we would be down a little bit, but we would still be above 20,000. We would still be above some previous supports that we've seen around 22,000. So I don't think that would necessarily be horrible, but it could give us a nice little pullback here. Now, April is a little bit better. A lot of years we get around plus 30%, plus 50% even. And the red months, most of them are negative 5% or less. So this is typically a great time in April. March is typically a pretty good month for securities, if I remember right as well. Be ready just in case we do see a little bit of a dip to be able to buy that dip if you want to get more Bitcoin in the meantime or in the bear market. Now, I do think this will be a pretty crazy month in March for cryptocurrency, and we'll have to see exactly how this turns out. But the fact is we do have CPI readings coming in here very soon, which will be the last CPI and PPI and PCE before the next Fed meeting, which could cause the market to move a lot. We also have the Ethereum testnet successfully forking the Shanghai upgrade for the rehearsal for the full Shanghai upgrade on the mainnet, and that's expected to happen in March. So in the next month, we'll have the next major upgrade for Ethereum. We'll have to see how that turns out because a lot of people are worried about a lot of Ethereum being unstaked. We also have Polygon Matic having a big ZK EVM date coming up on March 27. So some people may be buying up for these events. We also have, in terms of Tesla, which we'll talk about Tesla here in a second, they are also having their investor day tomorrow, which is in March. There's a lot coming in the next month and a lot of volatility, a lot of excitement coming. And as the next Bitcoin halving comes up, we're getting closer and closer to being only 1 year out from that. I would expect that to cause some buying pressure as we get further along over the coming months, some more buying pressure on Bitcoin specifically. But we'll have to see exactly how all this shakes out in the meantime. Last couple things I want to cover. Tesla institutional ownership is now 47.5% of shares outstanding versus 45.5% 3 months ago, and 55.6% afloat now versus 53.9% 3 months ago. I think this is a really good sign for Tesla investors because this means that there are institutions that are really trying to buy and are very confident in Tesla. This is a big change, 2% in 3 months. Of course, this means that some retail investors got shook out, which honestly, if they get shook out when the Tesla price was down, they probably shouldn't be holding Tesla anyways. Probably a lot of people that bought over the last couple of years that just got fudded out with Tesla falling from 400 down to 100. But personally, I've been buying, and obviously a lot of other institutions have as well. Typically a good sign. And then the other thing I want to cover, Las Vegas Strip. January gambling revenue rose 25.74% year over year to $713.2 million. So this is 1 month revenue, $713 million on the Strip. Now you might be asking, what does this really affect? Well, one of my largest dividend holding and one of my larger stock holdings is Vici, which is the real estate investment trust that owns a lot of the property in Vegas. This is great because this means that they should probably appreciate. If there's a lot of gambling, right, there's more opportunity for more businesses to come in. They'll have a higher ROI. As more and more companies come in, the ROI comes down. But there's a larger amount of companies there and more activity, more money flowing in, should appreciate values. So as this number comes in, hopefully this continues where the gambling revenue is high, it should help Vici in terms of appreciation and should help them be able to get higher and higher rents, I would assume, too, for any kind of properties that they have now or that they're getting new contracts for in the future, right? So great news for Vici holders. Now, I think there's something really interesting that we should think about, and maybe I'll make a full video on this, but I mentioned this to the Patreon today, and if you've made it this far in the video, you deserve this, right? There's a lot of fear right now over what's happening with CPI, over what's happening with the Fed, what's the maximum that they'll raise the interest rates to, the terminal rate. And a lot of people are just scared of buying risk assets, even at depressed valuations, right? I mean, we're looking at Google pretty much under the S&P 500 in terms of forward price to earnings. We have a lot of other companies trading at very big discounts, crypto selling at a pretty cheap level historically. And so many people are just scared of going risk on, right? I notice that even for myself. I have to remind myself to continue to buy, even though I don't necessarily feel like it, because these are good long-term assets. And a lot of this is due to the risk-free rate of return being so high. And I've talked about that on the channel. Everyone talks about it, right? You can get like 3 to 4% on your cash just at banks. You can get even higher on one-year treasuries. I believe it's around 5%. And as the Fed continues to raise rates, the risk-free rate of return goes up, so then less people invest in risky assets. However, there will be a time in the next year, most likely, where the Fed stops raising rates. And then probably in the next year after that, maybe, towards the beginning part of that year, maybe just a few months after we stop raising rates, right? The Fed will start lowering rates. And then I think we should be paying attention, because then there might be a mad dash to buy good risk assets, profitable companies, and maybe some long bets as well, some unprofitable companies, but I'll still be buying profitable companies and cryptos and that kind of thing. There will be a race to buy all that, because they'll realize the risk-free rate of return will continue to come down to maybe 2%, maybe less. If you think back a year or two ago, right, what were you getting at your bank in terms of deposits, right? It's barely anything. And there won't be that other option. So instead of waiting, a lot of people will say, hey, the risk-free rate of return on a one-year treasury is coming down to like 4% instead of 5% where it is now. I better go buy risk assets, because it will continue to come down. So I can get that 4%, but what will I be buying Google stock at, Amazon, Bitcoin? What will I be buying that at a year from now, right? It's probably going to be up more than 4%. So I'm actually losing if I invest in one-year treasuries. There will be a time where we realize as investors that the risk-free rate of return is not going up, it's going down. So we have to pile into assets, and we realize other people are thinking that too. So there's going to be a front run, right? I think that's what people are waiting for when the Fed stops raising rates. And you can see that because even when the Fed just speaks a little bit dovish, like just a little bit more than we expect, still talk about inflation, but maybe there's some disinflation, inflation's slowly decreasing over time, the markets rally like crazy, like 5 or 10% in a few days. And that's without them even talking about bringing down rates. They're not even talking about bring down rates yet, they've said. So I think there will be a mad dash. So remember that when you're buying into stocks and companies that you believe in or cryptos that you believe in right now, think about not just the fact that they could go down day after day, which sometimes it feels like that's the case, but think about just a year or two from now when people are racing into them because they realize that they're not going to be able to get jack squat at their banks or on CDs or any kind of treasuries. That's when we will feel really like we have been doing a great job of buying over the last couple of years. I think that will be the time where it really feels like it's paid off. Now, I just wanted to tell you that. Maybe I'll make a full video on that, but let me know your thoughts on that underneath the video. Just a little reminder, a little motivation for you. Of course, do your own research. Just make sure that you're comfortable with whatever you invest. Let me know your thoughts on all this underneath the video. Thank you so much for watching. I appreciate it. If there's anything specifically you want me to cover, let me know in the comments section, and I will see you in the next one. I'm about to go get an old-fashioned and sit on the beach. Bye.